Welcome back to Business Deals and Real Talk with the Choes. I'm Holly.
And I'm Jonathan. Today, we're kicking off our buyer education series, where we're going to talk about what buyers really need to know before and during the process of acquiring a business.
And we're starting with probably the most important question. Are you actually ready to buy a business? Because before you start looking at listings, signing NDAs, and getting excited about opportunities, you need to understand yourself as a buyer.
And that starts with your finances. How much capital do you have available? How much are you comfortable investing? What does your credit look like? And will you need financing?
Here's an example we see all the time. A buyer comes to us and says, I have $100,000 and I want to buy a $1 million business. That doesn't automatically mean they can or can't buy that business. We need to look at the entire picture. Can the business support the acquisition debt? Does the buyer have enough capital and liquidity? Does their background support the acquisition? That's why we encourage buyers to talk to a lender early in the process.
Your professional background matters too. Let's say you've spent 20 years managing a manufacturing operation. You understand employees, inventory, production, customers, and vendors. That experience could translate really well into acquiring a manufacturing business.
Or maybe you're a healthcare professional looking at acquiring a therapy practice. You may understand the clinical side very well, but now we need to talk about the business side. Are you comfortable managing employees, understanding billing, marketing, financials, operations? Knowing where you're strong and where you'll need support is really important.
But being financially qualified doesn't necessarily mean a business is the right fit.
Exactly. One of my favorite questions to ask a buyer is, what do you want your life to look like after you buy the business? Because sometimes buyers forget that part.
Here's a great example. Let's say you tell us you want flexibility. You want more time with your family, maybe you want to travel, and you don't want to work 60 hours a week. Then you find a very profitable business. The numbers look fantastic.
But then we meet the seller and discover the owner works 6 days a week, handles all the sales, manages every employee, and maintains all of the key customer relationships. That's important information.
It doesn't necessarily make it a bad business.
Not at all. It could be a great business for the right buyer. But if your primary goal was flexibility, we need to ask whether that particular opportunity actually gets you there.
Here's another example. We see buyers who say, I want an absentee business.
We hear that one a lot.
And there's nothing wrong with wanting that, but you have to understand what absentee really means. Maybe the seller currently works only 10 hours a week because they have an experienced general manager who's been there for 15 years. That's great. But what happens if that manager leaves 6 months after closing?
Exactly. You need to understand the business beyond what the listing says. And here's another scenario. A buyer tells us, I only want to buy a restaurant because I've always dreamed of owning one, but they've never worked in a restaurant.
That's when we start asking questions. Do you understand food costs, labor, scheduling, inventory, customer service, nights and weekends?
And after talking through their goals, we may discover that what they really want is entrepreneurship, not necessarily a restaurant. Maybe a service business, distribution company, franchise, or another type of business would actually be a much better fit. That's why we always encourage buyers to have criteria, but also keep an open mind.
There's also the income question. A buyer may say, I want a business generating $300,000 in cash flow. Okay, but if you're financing the acquisition, that entire $300,000 isn't necessarily going into your pocket.
Exactly. You have to consider debt service, working capital, future capital expenditures, taxes, and reinvestment into the business. That's why we don't want buyers simply looking at a listing and saying, the SDE is $300,000, so I'm going to make $300,000. There's more to the story.
And that's really what buyer education is about, understanding the complete picture before making one of the largest financial decisions of your life.
So before you start asking, what businesses do you have for sale? Ask yourself, what can I realistically invest? What type of business fits my experience? How involved do I want to be? What income do I need from the business? What are my strengths and weaknesses? And what do I want my life to look like after the acquisition?
Because the goal isn't simply to buy a business.
It's to buy the right business for you.
And in our next episode, we're going to talk about something we see all the time.
Buyers searching for the perfect business.
And we'll explain why the perfect business probably doesn't exist and what you should be looking for instead.
Thanks for joining us on Business Deals and Real Talk with the Choes. Follow our buyer education series as we walk you through the buyer's journey from preparing financially and finding the right opportunity to making an offer, due diligence, financing, and ultimately getting to the closing table.